AMD just had earnings yesterday and they were insane. Their growth was absolutely disgusting. And we're going to go over how good these earnings were, why the stock is down currently, where I would be buying AMD long term, if I would be buying AMD long term, and what do I think about the company overall. I'm going to spoil it. I love the company, but I'm not going to buy it right now. And I'll tell you why. Hit the like button, subscribe, check out our Discord community down below. You guys get access to free courses, free live streams, free seminars, free webinars. I'm throwing out 4 long-term investing videos a day and 2 trading videos a day. All of them are completely for free. And if you want to talk about some long-term investments and trade with us, go check it out. Link is in the description. So AMD beats earnings on revenue, but the third quarter forecast comes in a little bit light, which is a big reason why we're seeing the stock down currently right now. The numbers were absolutely crazy. Very, very good growth. Something that's very important I want to talk about here. EPS came in at $1.05 adjusted versus $1.03, so they beat EPS. Revenue was $6.55 billion versus the $6.53 billion, which is very, very solid there. And the chip maker says that it's expecting $6.7 billion in revenue during the current quarter, plus or minus $200 million, and analysts had expected 6.83. So really good. AMD makes phenomenal chips. I feel like most people can agree with that. I am looking to invest in Intel, as I have been for the past couple of months. I briefly talked a little bit about AMD in that video, so if you want to go watch the Intel video I did, go check that out. But phenomenal company. As you can see here, AMD's chips have surpassed Intel's in terms of performance, and investors are looking to see if the company has supply chain and execution to take the market share from its rivals. All 4 of AMD's segments grew during the quarter, which overall revenue soared 70% year over year. I want to say that again, 70%. I want to make sure you guys can see this. I moved my face today. 70% year over year. This is a company that's overvalued. I'm just not going to lie. I love the company. But when you look at the PE of how crazy this company is right now, you have to understand that even at a 5-year PE right now of 95, it's because we have a ton of growth. So great numbers. Really love the company. Is it something I'm going to buy? Well, let's talk about this first. So a couple of major things to take a look at is going to be the PE. PE is at 40. Not the best for the past 12 trailing months, but the past 5 years, the PE is at 95. Profit margins sitting at 18%. The 5-year margins at 14%. The gross profit margins are at 48. Now, one thing I want to say is, like, if this company can scale over the next 5-10 years to overtake market share from Intel, that would be massive for the company. I really love Lisa Su. She's the CEO of AMD. I think she's a phenomenal CEO. I really love the company. I really love the chips. I have AMD chips in all of my computers. And I think that the company is poised to grow drastically. The biggest issue that I have is the valuation and where it's trading at currently right now, but we'll talk about that in a bit. Price to sales ratio is 7.21. No dividend, obviously, which I don't really care. Return on assets is 4%. Return on equity is 20%. 10-year and 5-year is book value growth is 165, 168. And this stock is very volatile. So if this is something you're looking to potentially invest in, you can see there are multiple times where the stock has rallied in the 2000s. From 1999, it was trading at 10 to highs in 2044, pulling all the way back. Looking at this top here of 2006 at 40, pulling all the way back, and now recently hitting close to $156, $157. Now, if we look at a big chart, and I know that if we're talking about long-term investing here, we don't care too much about the charts, but I do think it's safe to say when looking at a massive chart like this, we're probably, just going to be honest here, you guys are going to get mad, I think we're probably in one of these levels, right? We're probably in one of these levels where we're up in these highs. You can see that there's a potential massive head and shoulders pattern. That kind of looks like a penis, but a massive head and shoulders pattern here. And I don't honestly think that looking at this chart that we're going to move our way back up. I think that we're going to see AMD in the next couple of months, probably by the end of the year, down at 67, and then maybe by the lows of like 40. But we're going to talk about valuing this company very briefly first. So you can see Morningstar has a valuation, a fair value of 130. I think that's high. Last close was 99 bucks. If we look at the 8 pillars on Everything Money, which is a stock market like community, I guess would be, and stock market platform tool that I use for analyzing a lot of companies. They have an 8-pillar system, and you can see 5-year PE is ridiculous. 5-year, return on cash is just really not great. 5-year revenue growth is great. Net income is great. Shares outstanding is not great. They are diluting shareholders, and if they do have to continue to dilute shareholders in the future, that's going to end up hurting you as a shareholder. And the one thing to look to is just how overpriced this company is as we go into the stock analyzing tool. And I don't really want to say overpriced or underpriced because I really don't want to sway your decisions. Just because I'm not going to buy this company right now does not mean that it's not a company that's worth being added to a portfolio at someday. But you can see as we go through, past 1 year, 65% revenue growth. Past 5 years, 34% revenue growth. Past 10 years is 16% revenue growth. So honestly, if we're looking at the assumptions over the next 10 years, I would say the low side for revenue growth is going to be 10%, 15%, 20%. They might be saying to yourself, 10%, that is not, they did 65% this year, 34%. As a company, since we look at the next 10 years, as a company grows, their growth percentage is going to be significantly smaller. Growing a $1 billion company versus growing a $100 billion company is completely different. Not saying that they'd ever be the size of Apple, but Apple is like lucky to grow the company 1 to 2% return per year. So that's why I'm on the more conservative side. Profit margins, 6% for the past 10 years, 14% for the past 5, 18% for the past 1 year. I'm going to say profit margins at 5, 10, 12, being conservative. Free cash flow, I'm going to say 5, 10, 12. PE, 15, 20, 25. Now the PE should drop as the company gets bigger and bigger. We're looking at 10 years, 2032. And if we analyze and take a look at our annual returns that I'm looking for, just 15% at least, then you can see for me personally, I wouldn't honestly be buying this unless it's somewhere down around $40. Now, once again, if you believe the high side numbers, if you think that they're going to be able to do 20% revenue on average for 10 years, profit margins are 12, free cash is 12, PE is 25, PE to free cash is 25, then $81, if it hits that, then you could be looking to buy it. For me, I'm looking at $40, and I know a lot of you guys are going to be like, hey, $40 for AMD, there's no way in hell that's going to happen. And the two things I would say to that point. Number one, you're right. There's the probability is that's not going to happen. However, you can overpay for a good company, right? Like I've seen this all the time, and I've done this in my past. I found a good company, a company that I really love, a company that I think is going to be huge in the future, and you overpay for it. So just because the company is strong and the company is solid doesn't mean you can't overpay for that company. I talk about this with real estate a lot. Like if I bought a condo in Manhattan for $2 million, $3 million, I don't know what condos in Manhattan are going for. Am I going to make money in the next 20 years? Probably. But I can overpay for it, and in the next 5 years, that condo could be worth 50%. It's still a good condo. It's still a good property. It's still in a good location, but you can still overpay for it. And I'm not in the business of overpaying for shit. I'm just not. So for me, I love the company. I was buying this down at like $5 in like 2016, 2017. I ended up selling it around 60, so I made a lot of money off of AMD. And if AMD can ever get back down to $40, which that's only the 100 SMA on the monthly, which is a 60% drop from here. And if we look at the weekly chart, where we are at this point, that is close to a 60% drop from this point as well. I will be buying. Guys, let me know what you think. Comment down below. Peace.